For more on the stash of cash in corporate America, let's bring in Clayton Moran. He's analyst and senior VP at the Benchmark Company. He has a buy rating, by the way, on Google. Clay says Google may want to consider a share buyback with its billions. Clay, good to have you here. I'm curious, when you talk to Google and the folks over there, and you say you've got so much money, do something with it, whether it's a dividend or a buyback, what do they say to you? Do you get a lot of pushback?
Well, they really give no inclination that they're about to do a buyback or pay a dividend. They give really a standard answer, which they mentioned on their last earnings conference call, that they continually review their different cash options and that they have made no decision yet in regards to a buyback or a dividend. So there's not much that can be gleaned from talking to Google's management.
Is that what you want to see them do, Clay? I mean, is that the most useful or the best use of their cash that you can see as an analyst?
Yeah, absolutely. I think they should initiate a sizable stock buyback. I mean, the stock is down materially, well off relative to the NASDAQ. It's trading at a very low multiple, and yet they're growing still very strongly. So it would be an indication that they believe in the stock in the future, and it'd be a more efficient use of the cash. Letting the cash sit on the balance sheet and collect 1% interest is basically a drag on the overall earnings growth, which also hurts the stock. So I think they should initiate, a $10 billion or more stock buyback program.
What about a special dividend? I mean, we've seen Microsoft do it. Mike Holland is calling for them to do it again. Is this a positive event for shareholders? It may be better than a stock buyback?
I think a buyback is better because it's an ongoing return of capital that can support the stock. A one-time cash dividend is just that. It's a one-time event. Putting cash into the hands of investors. I think it's a more efficient outcome than just sitting on the cash, but my preferred outcome would be a stock buyback.
Clay, we've been talking to some different folks, and some have said that, they think about Microsoft, and they say Microsoft's decision to pay a dividend signal that the stock had become more value-oriented than growth-oriented, and that Google may be concerned about, issuing a dividend or starting to buy back stock, that it might be the first step towards becoming a Microsoft, that they're no longer a high-growth company. Do you think that plays into their psyche, if you will, in terms of trying to make this decision on what to do?
I doubt it does, probably. I mean, the indication that management gives is that they're really not that concerned with how the street views them. I think they just believe that a stock buyback or a dividend doesn't really do anything for the stock. Problem is, I think it does something for shareholders. I don't think management is worried about sort of that perception of becoming a value story. And interestingly to me, the street or the stock price is sort of telling you that it's a value story anyway, trading at only 10 times cash flow and about 14, 15 times earnings if you strip out the cash. So, it doesn't really matter much at this point if Google does a dividend or a buyback in terms of what it indicates to the market. The market's already telling you it's sort of a value story and that growth is slowing.
What about buying another business that's more about growth? I mean, search is kind of a utility, isn't it?
Well, I mean, the funny thing is that the market's implying a slowdown in growth, but the recent quarter they reported, 24% growth, so it's sort of a disconnect there in my mind. But, to answer your question, they have been buying smaller technology companies, but they just can't find a use for $30 billion. So they've been doing $700 million type deals this year. They've done a couple of them. They've done smaller ones as well, but, for high growth type of assets. But, $30 billion, they're not going to find many acquisitions that large.
It's tough. Even Warren Buffett had difficulty there. All right. Hey, Clay, thanks so much for joining us. Clayton Moran there, Senior Vice President at the Benchmark Company.